Beth asks, my client bought a house at just the right time in Los Angeles, so 3 years later it's being sold at a $650,000 gain. She's entitled to a $250,000 capital gain exclusion from primary residence. So she's left with $400,000 in capital gains. Is there a way for her to avoid or defer tax on that amount? She's actively looking for a new house and plans to buy within 6 months. It seems that a 1031 exchange wouldn't work with personal residence unless someone has better, any possibilities. You discuss with the client if you were me and help. Anyways, so I don't love the the phrase avoid tax. Tax avoidance is generally not a thing I like to discuss and not a thing that people should be doing, but I get what you're asking. It's like, is there a way to optimize this situation for their tax, for tax purposes? And really, you're correct. There's not a 1031 exchange is not going to work for a primary residence. Things you can do to defer tax on that amount. You could potentially, I think, with this, look at opportunity zones as opportunity zone investments as a possibility to defer taxes with this. So look into that. That was new with tax reform, and then there's been here in 2019 some more concrete guidance on that. Tony Nitty with Forbes has a pretty detailed article, I believe, on opportunity zones. He's one of my favorite, just kind of wordsmithing around some technical issues and questions pertaining to the tax code, and really diving into the weeds and nuances. So I highly recommend following him on social media, but also checking out his articles on Forbes.com. So that may be one thing you can do. Other things you could do, they could look at, making big time moves on the itemized deduction side. So like some charitable contributions are large, or doing setting up some structures from a charitable perspective where they could deduct that in this tax year, but make those actual contributions to organizations over time or at different times. So some things to look at there, but one thing potentially is opportunity zone. It just really depends on how liquid they want to be and how much they want to defer taxes. But I'm not aware of anything with an opportunity zone code that would prevent you from, and basically can offset any sort of capital